You're in tune to the Paperflip Real Estate Podcast.
Buyers, sellers, renters, realtors, and investors. I'm Lloyd for Real Estate, and this is the Paperflip Podcast. Now let's talk about what's happening in the real estate market. Whether you're a first-time buyer looking for the perfect entry point or a seasoned investor wanting to make a smart move, it's crucial to understand where the market might be heading. With interest rates and home prices still on the higher side, we could see some shifts in home values over the next 12 to 18 months. Now, for buyers, this could be great news, opening up more affordable opportunities for a long-term home. But for sellers and those looking for a quick return, it's a heads up that some properties might not fetch the prices we've seen recently. Now, here are 5 types of properties that industry experts are watching closely for potential value decreases. Let's start with condos and city apartments. Now, remember, when condos were the go-to for retirees and anyone wanting a low-maintenance vacation spot, well, the tide might be turning. It seems that demand for condos isn't as strong as it used to be. Also, apartments in bustling urban centers could also see a dip in value. Big reason for this is the rise of remote work. With more people to work from anywhere, the need to live right in the heart of the city has lessened. We've seen a trend of people moving towards suburban or even rural areas where they can often get more space for their money. This shift in demand, coupled with an oversupply of city apartments in some areas, could lead to lower prices. Next, let's take a look at older suburban homes. We all know and love those classic stick-built homes in established suburban neighborhoods. However, with the constant buzz around new construction, these older homes might have a tougher time holding their value. It's been noted that while brand new large homes in the suburbs and beyond are commanding higher prices, homes that are 10 to 30 years old in the same areas are facing more competition. This could present a fantastic opportunity for buyers to get into a great neighborhood at a more affordable price. For homeowners in this category, especially those relying on their home's equity for retirement, is something to be mindful of. Next area to look at is certain high-end luxury properties. What exactly is a luxury home? Generally, it's a property priced at 2 to 3 times the local median home price. These homes have been in high demand, which has actually led to an oversupply in some markets. Because of this surplus, combined with today's higher interest rates, the pool of buyers who can afford these premium properties is smaller. Even affluent buyers might be more cautious with their investments right now, potentially opting for less extravagant homes. And of course, this is a very market dependent, but it's a trend that we're seeing that could lead to a price reduction in the luxury sector. Now let's take a look at homes in areas with high unemployment. While remote work has changed the game, local economic health still plays a huge role in home values. In areas where unemployment rates are on the rise, the real estate market can feel like a strain. And when people in the community are facing financial instability, there's naturally less demand for housing, which can drive prices down. This creates a challenging situation. Now, for buyers, it might mean more affordable options, but it also comes with the uncertainty of the local job market. For current homeowners, it can be concerning when it's time to sell the home within itself. Next, let's take a look at vacation and second homes. With the average home price sitting where it is, the idea of owning a second home or a vacation getaway is becoming more of a dream than a reality for many. It's expected that these type of properties will likely see a decline in value in the coming years. Buyers are being more deliberate with their purchasing decisions. If they already have a primary residence, the extra expense of a second property, which often comes with a hefty insurance and maintenance costs, might not seem as appealing right now. This cautious approach from buyers will likely lead to a dip in demand and consequently in the value of these homes. Thanks so much for listening to the Paper Flip Podcast. This is Lloyd for Real Estate.